What's up, crew? It's Jordan here, and I've been getting a lot of requests to go deeper into strategy using parallel channels. This is really one of the most powerful technical analysis methods that you can learn and use. And I do use the parallel channel drawing tool every day. As the more you start to use this, you will see that these channels are absolutely everywhere, all over the charts, and they allow for us very clean trading opportunities. I really do believe that if you're not drawing in parallel channels on the charts, you are trading somewhat blind. Many traders do miss these channels, and they can actually predict very nice trades with surprising accuracy. If you're having trouble finding where to buy or sell with confidence, this can be very useful. In our current range, we can clearly see the beautiful bounces for the longs and the short trades, as well as the extremely significant median line. And today I'm going to go deep into strategy on how to draw these in perfectly and trade them safely. If you are trading along with us, please make use of the Apex DEX link in the description. It is my preferred DEX. It has been built by Bybit, and there are some beautiful deposit and volume milestone bonuses that have been given to this community by Apex, and that specific link is in the description. For the sake of learning, let's go back to our previous range here on Bitcoin, and let's talk about what is a parallel channel. A parallel channel is simply two trend lines moving in the same direction, and they are parallel. Price moves between these trend lines like it is stuck within a lane, and this is where the power comes in for trading. It is quite simple, and the key factors that you need to understand here are the upper resistance line, the lower support line, and the median line of the channel, which acts as a support and resistance flip. Using parallel channels does take a simple understanding of trend lines and support and resistance, so make sure you have watched those tutorials in my playlist on my channel. The main two types of parallel channels are an uptrend, an upward sloping parallel channel, as well as, of course, a downtrend, which is a downward sloping parallel channel. For an uptrend, try to identify higher lows and higher highs. Then use your parallel channel drawing tool to connect these lines, starting with either the lower support or the upper resistance. Also, when drawing it in, keep aware of that median line and try to find significance on the support and resistance flip. Don't force the channel if it's not there. If it is structurally significant, it should appear quite easily. The more touches on each line give it stronger validity, and try to decide as a rule whether you are focusing on wicks or bodies for your lines. This is a matter of preference, but make sure you are trying to find the most touch points for your lines. There is no exact place to place these, as they are support and resistance zones, but try to find what looks best to you on the chart. Let's move on to the major strategies that traders use to trade these parallel channels. Number one, and the most common, is bounce trading, to trade the reversals at the major support or resistance levels. The next one is to trade the breakouts, either to the upside or the downside. And this does require some patience and looking for retests of the support or resistance flipping. Otherwise, you might get caught in a fake out scenario. A more advanced method here is to also scalp from the median line, but I mainly use the median line as a deciding factor for trend direction. Some common mistakes here that traders can easily fall into is, of course, forcing channels that don't actually fit. Don't draw in what you want to see, but only draw in what you actually see as having confluence on your chart. Another mistake is ignoring the overall trend. Make sure that you are finding market structure when drawing in these channels. Another big mistake is trading every touch without confirmations from your other indicators, like your RSI, your market cipher, or your smart money concept order blocks. And then the major trap here is falling into fake breakouts or fakeouts. So make sure you only trade breakouts using retests and confluence on your momentum indicators. So let's have a look at some practical examples. Let's imagine, for the sake of this teaching, that we are drawing in this parallel channel somewhere around this level of price action in time. We can see the channel as being significant because we do have at least 3 touch points on the top and 3 touch points on the bottom. This means we can go in and draw the parallel channel. Make sure that you do extend your channel out into the future to give you enough room for future price action. Then we can immediately see a very nice reversal trade that was given to us from these previous 3 touch points. And we were also given beautiful confluence from our market cipher indicator in the form of a bearish divergence on the daily time frame as we were moving away from that trend line. You can use any other indicators for confluence here that you do like to use in your trading plan. Remember to always plan the trade and trade the plan, and this does mean identifying the level and drawing in your trade, making sure that you do have a stop at least above the previous swing high wick. Our market cipher bearish divergence came in somewhere around this candle, and that's where we would have entered the trade with at least a 1-to-3 risk to reward ratio. And here we can see just how nicely that trade played out, of course with major profits being taken at the median line and along the way, but actually our full TP being hit with a very nice wick at the support of the channel. We then have a very nice example of a breakout trade to the downside, and these are more risky, so please make sure you are looking for the retests. This is where price fell below the support at the bottom of the parallel channel and then came back to retest with a very nice wick and a shooting star pattern, which is a very strong reversal pattern in price action candle reading. We can then see a very nice trade that played out from that breakout level. Some pro tips from me here. Of course, make sure that you are combining the use of your parallel channels with your other indicators, particularly those that are showing you support and resistance, like your fixed range volume profile, which gives you your very strong value area low and value area high zones, and your momentum oscillators like your regular RSI here on this 4-hour time frame that gives you your oversold and your overbought conditions for confluence. Remember, higher timeframes equals stronger channels, and channels work best in trending markets. In a very quick recap, parallel channels define your structure, they help identify your entry and exit points, and they are best used with confirmation. If you found this helpful, like the video and subscribe, and please feel free to ask any questions in the comments. Also, drop a comment if you would like me to go into more advanced strategies using these parallel channels.